All right, thanks for tuning in this special coverage of GST and markets, and it's a landmark Wednesday for Indian markets. It will be remembered in history book as one of the day when hopefully one of the biggest and the most ambitious tax reform has taken place, something which has been long overdue. It should have happened a couple of years ago.
A decade.
10
ago, years.
Frankly.
Yeah.
Now, the market positioning, Aisha, is very interesting. The way markets have rallied, the way consumer logistics and some of the GST related stocks have rallied, markets believe that this would be a game-changing moment from tomorrow morning. But the economic reality and the ground reality is different. GST is crucial. GST is important. It is the most powerful reform. It's a headline-grabbing reform. But from a market standpoint, earnings and economic activity will not change for next 12 to 18 months.
Yeah. But what is it that you're sensing about the markets? Because clearly it seems like the markets also have gotten into a bit of a pause mode after hitting that 8,700 mark. And not just us. Globally, we seem to be aligning to world markets as well. And extremely static. You're seeing this typical nature wherein there is some tremendous amount of profit booking in the likes of ITCs, Bajaj Finance and Marutis of the world, which have made a lot of money for investors.
Actually, we've put a fantastic July behind us. So obviously, profit booking was always coming. Now it was a matter of time. If it has come this week, if it would have not come this week, it would have come next week. So I think profit booking was always around the corner. But you got to understand the fabric of the market, and the fabric of the market is very clear. Interest rates will not go higher. There is a lot of global liquidity, earnings have been decent, and there is massive inflows into emerging market equities. So every big decline, I'm not talking about today's decline, I'm not talking about yesterday's dinky cut, closer to levels of 8,200, 8,300, I think this market will once again give you a buying opportunity. Earnings have been just about decent. There is no reason to downgrade earnings, but in the mid-cap space, there are enough and more factors which you need to really tom-tom about, because earnings have been strong, growth indicators are picking up, and with so much of domestic liquidity also sloshing around, it's really hard to make a very bearish case for Indian stocks in the short term. But markets always climb the wall of worry and they come down on the ray of hope. So the wall of worry was Brexit, the wall of worry was earnings season and the suspense on GST. But for the moment, since a lot of good news is in the price, in the short term, we may clearly struggle, or we may just simply hit the pause button.
Yeah, and the big headline today is that the GST has finally been tabled in the upper house. The discussion goes on, and perhaps it's going to be going on till midnight. Who knows? But let's bring on board some experts and try and analyze what would GST mean for the markets. And given the pause that the markets have seen off late, what is the market really wanting and pricing in? Sunil Singhania, Gautam Chacharya, Nirmal Jain, as well as S. Naren, the biggest market voices, join in to analyze the market mood right now. Gentlemen, evening. And Naren, let me start off with you. You know, in India, it's all about GST. How, according to you, will GST change the landscape for India? Will we be looked at in a very different light from here onwards?
See, GST is something, it is like not something which can overnight change the landscape. There's a lot of work required. There's a lot of transition which has to happen. On the whole, you know that as, for example, what has been accomplished in the last 3 years with high real interest rates is the focus on financial assets. When money starts going into financial assets instead of going into real estate and gold in India, it transforms markets. Like that, as GST gets developed, if you are able to reduce the, if you are able to improve the compliance on most products, what happens is you can have lower taxes and still collect equal sum of money. So these things will play out over a period of time. And one of the things that we have learned over the experience of watching other markets is that at the time of implementation of GST, there are likely to be teething troubles. And one has to successfully cross the teething trouble without losing faith in it. And I think as long as that happens over the next many years, you will see that the size of the organized sector in many industries will go up. The compliance of taxation will go up because of the set-off nature of GST. And in effect, the economy will substantially benefit out of GST. But it is not an overnight mantra. It's not as if GST gets passed and overnight everything happens. It's going to be a long period of time, and India will gain over the next 5 to 7 years out of GST, not over the next 5 months. Over the next 5 months, we could have teething troubles, but over the next 5 to 7 years, we'll be a big gainer.
Well, long-term positive, short-term, yes, implementation, the entire IT backbone, the on-ground activity is not going to change because there will be a lag, there would be a time lag, and given the way our markets have run up, stock prices are already factoring in a lot of good news. The sectors which would benefit, they include logistics, FMCG names, auto companies, where taxation structure will simplify, the ease of business will come down, but that recovery or that economic activity is still a good 18 to 24 months away. So somewhere I guess a short-term adjustment in the price or short-term price action is slightly euphoric, and there is a little bit of euphoria or greed which already has kicked in. So Gautam, GST and markets, that's the connection which we are discussing. How much of the good news or GST uptick is already in the price?
So markets obviously are taking this as a huge sentiment positive because specifically for global investors, this was one big headline reform and gives comfort about the government's commitment to reform agenda and therefore comfort around the longer term growth potential being realized in India. Having said that, in our view, a lot of the sectors or stocks which are GST beneficiaries, if we do a crude rough cut analysis about what the potential impact on NPV of these stocks are, to us looks GST is already priced into those sectors and stocks because these stocks and sectors have re-rated a lot more than what these NPV numbers suggest.
How significant is this reform, Nirmal, according to you, from a market standpoint? We all know that this is a headline grabbing movement. It's an important reform. This will change the India positioning and India opinion. But in terms of an actual impact, on-ground impact, what is your understanding?
I think this is very significant. This is the most significant reform that this country would have had in several years. And this has been long overdue, and I think if it gets through, forget about the investor sentiment for a moment, but millions of enterprises, the small and medium enterprises and enterprises that do business, life becomes simpler for them. The tax leakages become lesser, and from consumers' point of view also it becomes much easier. See, today, if you imagine this just one country and there are every state, 35 states are different markets, different, so many taxes, indirect taxes at different levels. It really makes life miserable for any company that's trying to grow national in terms of logistics, in terms of tax structure of every state being different, and also the goods that are moving physically are have to pass through entry point of every state boundary. So I think the current tax structure that we have is very inefficient from all perspective. And if India has to become globally competitive and we really want to make dream of Make in India true, then also this is a very, very significant reform measure. And if coming back to stock market, I think this will be a very strong vote of confidence in this government's ability to get things through. Because for last 2 years they struggled with many things. There have been some misses and some hits, but with this I think this will be a very, very significant thing. So if you look at last 25 years, a few major things that have happened from that 191 budget when lots of taxes were slashed, reduced. Then another important thing that happened was of course the Aadhaar and the Aadhaar implementation, which has crossed more than a billion mark now. And now GST, which basically combines India into one market.
Naren, there's been a significant run-up in the markets that we have seen, the ride up to 8,700. Sure, we can crib about the fact that we've been in some sort of a consolidation mode off late, but July has been ecstatic for the markets. Do you think that will stay? What is it that the markets are pricing in when it comes to GST? Is it already in the ticker, or do you think part of the rally is still ahead of us?
See, I think market always tends to overrate the impact of anything in the short run, and there could be people who would sell on fact, having bought on the hope that GST will come. So in the near term, I don't think the impact is going to be so much. You know what has happened to the e-commerce boom. It is not that people are not buying in e-commerce today, but the e-commerce bubble has got deflated. Like that, there will always be a situation where there will be periods of time when the market overrates the short-term impact. If they correct and they become attractive, that would be maybe a better period for long-term investment. In the short run, markets can move in a way very different to what people are thinking. Having said that, I think GST is a very good long-term impact, and therefore it would actually lead to a re-rating of the markets over a long period of time. In the short run, if it gets drastically re-rated, there is obviously scope for a correction.
Sunil, this question is coming your way. Now, what is your understanding of really right now the way markets have moved ahead of the GST event?
It's been raining heavily in Bombay. In fact, it's been raining good news for the last month or so, and that is clearly reflected in the price performance of not only the Indian markets but global markets. So I think we have seen a lot of positives, and to some extent the markets are reflecting that. Our view is that it's a time for consolidation. It's a time to reanalyze based on, obviously what is happening on the fundamental perspective as far as each company in each sector is concerned, and then take a view going forward. So we remain constructive, and we are hopeful that it's a matter of time before we start to trend up again. But at this point of time, we are of the firm opinion that market is going into consolidation phase.
Nirmal, how are the markets assessing the importance of GST, and are they baking it all in too soon?
So I think markets are driven by a number of factors other than GST as well. Because markets are led by global factors, markets are led by global liquidity, corporate results, and many other things. So I think that we should be a little careful there that global liquidity today is very, very benign. India is attracting a lot of foreign capital, for its fundamentals that are far superior. Even keep GST aside for a moment than rest of the world. And on the other hand, there is the markets have run up very fast and very sharply. So there are apprehensions that there can be a steep or sharp correction. Given that, GST will certainly boost sentiment of foreign FPI investors. They'll get their confidence in the reforms, the continuance of reforms, and therefore attractiveness of India as an investment destination will be reinforced. The impact may so what happens to market tomorrow, day after, will always be driven by many other things. But if you look at medium term, 1 year, 2 year, 3 year, then I think this is certainly very positive for investor sentiment. And impact on GDP also, as somebody rightly said that many big reforms and big measures, you overestimate the impact in 2 years and underestimate its impact in 10 years or 20 years. So I think it's a very long-term measure. Many things will get right as we go along, we should look at this, this development with a lot of optimism.
Right, Gautam, how much time do you see will it take for actual benefits to start coming in because of GST into the real economy?
So it will take at least a couple of years from the implementation date when the real tangible benefits in terms of productivity benefits, in terms of formalization of the economy start showing up. In the immediate first year or year and a half of implementation, GST is likely to be disruptive and create uncertainty because that's proven by the fact that the debate around revenue neutral rate and what the right rate is remains very, very diverse, and the range of rates recommended by expert committees is from 12 to 26%. So in our view, to get the right revenue neutral rate on day one is going to be very, very difficult, and it's quite likely that the first revenue neutral rate gets revised within a period of 3 to 6 months, because it's such a complex exercise, and to expect to get the right perfect revenue neutral rate is likely to be very difficult, which will also have its own impact in terms of uncertainty for the broader markets.
Sunil, apart from logistics, which are some of the other sectors which will benefit because of GST?
So I think GST is going to be a game changer, but it's not that GST comes and all the companies in particular sectors will start to straight away make huge profits out of it. Obviously, sectors where there is a huge incident of a parallel economy, those sectors would clearly benefit. So whether it's the home building materials or even some of the other sort of consumption sectors where there is competition from the unorganized sector, they are clear winners. Having said that, world is very dynamic, and companies will adjust. There is a competitive intensity, so it's not that the full benefit of any regulation change is going to be retained by the respective companies. Yes, the volumes might go up, but the competitive intensity is going to be great. So I think again I would advise that don't buy anything just because the sector looks like to be a beneficiary of GST. You also have to see how much of it is discounted in the price, how much of it is in the valuation, and then take a case forward. But having said that, I think GST in itself will be a key positive for both the Indian economy as well as the markets. Obviously, some part of the GST bill going through is there in the price, and that is the reason we are seeing the markets being a little bit soft despite all the good news which is coming from the GST. But on a trending structural basis, I think GST could be a big positive. Also from a global investors perspective, whenever we meet global investors, one thing which they always ask is when is the GST getting passed, and I think that overhang and that positiveness would also reflect generally in the country being sort of upgraded from an investor's perspective.
Sunil, so what is your aggregate view on the earnings environment? We can pick up spots and talk about earnings have been strong, but if I look at the aggregate picture, frankly, it's not very inspiring. I mean, we can't make a case for a mega earnings recovery so far.
I would disagree a little bit there. I think it's been evenly matched in terms of disappointments with slight outperformance. Having said that, the disappointment or outperformance is very marginal. Companies have done 0.5%, 1% more or less. There's also a little bit of confusion relating to the the new accounting guidelines, and some companies have basically had some confusing results based on that. Having said that, anyways, June quarter, nothing great was expected. We have seen the fact that a lot of companies were reeling under water shortages. There was slowdown in demand even in construction and so on and so forth because of the same reason. But as we move forward, I think July started as a great month. We have seen good volumes in two-wheelers, four-wheelers. Cement sales have started to inch up. And there is a general consensus that the monsoons have been great, the sowing is good, the rural income should rise, and maybe from September and October we will start to see the Indian consumer coming back, helped also by the 6th pay commission payout which is expected in August. So I think equity markets always believe in the future, not in the present or the past, and at this point of time the present definitely looks much better. And then the future looks much better than the present or the immediate past.
Right. Narayan, fundamentally, with the GST in place now almost, will things change for, say, logistic companies? From a GST perspective, are some mega trends at play already?
Clearly they would be, but the way anything happens doesn't happen overnight. So in the long run, you'll have to look at the logistics cost comes down, a number of godowns, and many of the people will drastically reduce the number of godowns. So if you look at it, that can lead to a situation where many of the godowns people come out of because they centralize logistics. So in the long run, it is an impact. But in the short run, it's very difficult to say whether the impact will be overstated in the short run.
But Abhay, just the point that we were chatting about, do you really think that the run-up in GST-related stocks is slightly overdone, or do you think it's quite justified?
Yeah, I think it is. Though on the flip side, I must also agree the fact fundamentally things are improving from what I hear. What I used to hear from industrialists 3 months back or maybe 6 months back was, nothing is happening. There's only talk for the present. That is, of course, changing. Now I'm hearing more positive notes. So if the rally is based on that, if you are buying based on that, then by all means. But I think, as you rightly pointed out, some hype is because of the GST. If it is that will get corrected, I think, and that's why probably I think today you saw some correction, and probably it will continue. It may not last for long not because of GST, because the other thing that has happened after Brexit, as far as the positive part is concerned, now people recognize that liquidity in the markets is going to be very high. Because of Brexit, because there's no way that any central bank is going to raise rates in a hurry. Now that liquidity will have its effect on and then India being a relatively better story as compared to a lot of other countries, it will attract flows. So that is going to protect your downside.
But the euphoria over if anyone has bought on the basis of GST is going to change the bottom line over the next 6 months or 1 year, that I think is overdone. And to that extent, especially in the B group more than the A group, you saw a lot of hyped valuation.
Gautam, I'd like to also draw your attention to flows. Ultimately we may talk about GST or what's going on with the earnings season, but the grain of the truth here is that it's global liquidity which is making all the difference, and it is liquidity which is hiding all the bad news and perhaps magnifying the good news.
So data suggests a lot more passive money, but last few weeks we've also seen flows into emerging markets funds resume. And that's also helping India at the margin. We haven't seen any material uptick in flows for India dedicated funds or say Asia funds who are looking at more active money management. So that's something still not picked up yet.
Nirmal, you interact with several FIIs across the world. Do you see India coming back on their radar in much more bigger a way once such a big reform actually gets passed in Parliament?
I think investors across the world are very positive and very optimistic about India. Only concern some of them, if at all they have, is about valuations, and nobody has any concern about fundamentals or India's basic strength and ability to absorb investment and give good returns on them. That is beyond questions. So all the investors are, so obviously some of the investors are concerned about valuation, they may buy at correction. So at least we have a healthy market. But all the investors are looking at India with a lot of positive optimism for a variety of reasons. One is growth here is still robust and is good quality growth. So it's not a growth which is just concocted by numbers, but it's like real growth. Two, government is moving in the right direction. So in the first 2 years, there's a little bit of fumbling and people are worried that whether they'll be able to carry the agenda of reforms. But now I think that confidence is coming back. Three, even other factors. You look at crude oil, again is going down, which is good for India. Commodity prices are soft. India is a net importer of commodities. Monsoon has progressed well till now, touch wood, and we hope that it'll do very well this year, because last 2 years have been very disappointing on monsoon and therefore agriculture front. Agriculture, although it's a small part of GDP, but has a cascading impact on manufacturing and services sector. So all these factors put together, I think all the foreign investors are looking at India with very great optimism, I would say.
Narayan, India has been enjoying a premium PE multiple. The Nifty is now trading at 18 times 1 year forward. Do you think these kind of valuations are justified?
See, one thing I ask people is go back 1 year back. At that point of time, people didn't say that markets are trading at expensive valuation. So let's look at what has happened in the last 1 year. Clearly, you had a bad monsoon that really impacted a number of sectors connected with rural India. You've had a great monsoon so far, and that would help the economy over the next 1 year. It doesn't help July to September data. It helps in the period after July to September. In fact, with a good monsoon, a lot of economic activity gets impaired between July and September. Let's take the second. Last year, people did not recognize the NPLs which existed in many of the companies. Today, the NPLs have been recognized, which has brought down banking sector profits. But is that a positive? Certainly it's a positive, because one of the problems which was known has come out, and due to that, if earnings go down, why should I worry about that earnings going down due to that? The third is oil. Frankly, if you look at it, oil goes down, brings down earnings of the large cap stocks, because many of the companies are connected to commodities. Having said that, are we a gainer from the $42 oil as compared to a $60 oil? The answer is certainly. So I think the way earnings are talked about at this point of time, so the fact that we are benefited out of oil, the fact that we are benefiting out of the recognition of NPLs, and the fact that we are going to see the impact of a good monsoon after 2 bad monsoons, all these factors are not been considered, and that's why I believe that over the course of the next 2 years, earnings should actually improve.
Nirmal, you spoke about valuations. So what is your sense about the valuation? And 1 year down the line, what kind of valuations do you think we could be looking at?
So, valuations in some of the mid cap and small cap might have run ahead of fundamentals. Some cases where my valuations look expensive, but when earnings catch up, they'll become very reasonable. So, on the whole, I would say that there will still be value, or if there's a minor correction, then again you'll find value. So, it's a bull market, and and a market with another thing that we must keep at the back of our mind, which I would like to argue, is that P multiples trend line will be upward because interest rates are going down world over, and it's just a matter of time that India also they start heading downward. So theoretically, when you work out P multiple, you start with the reciprocal of interest rate. That is what you would earn on a fixed, and then you can add growth and reduce risk. That's a classic model. So if the interest rates head down, then your expectations from equity also will go down in terms of return, and therefore people can pay higher price for the same earnings. But having said that, I think there are values, but of course they become difficult now. So whenever market has a healthy correction, they'll be good. But still, medium to long term markets looking very good from investment perspective.
Sunil, are the positives in the price at the current levels or no?
So, if numbers were an indication of everything, the life of all of us would have been so easy. I think based on this 10-year historic averages, a lot of global guys have gone short on bonds across the world, and they don't survive right now. So, times are changing, capital is much more cheaper. My view is that the WACC, which is the weighted average cost of capital, globally has come down meaningfully. Even in India, it is coming down. And maybe, the new normal might be a 17, 18, 19 PE rather than the 15 PE which we are used to. So I think the things are dynamic. There is a lot of liquidity. As I mentioned to you earlier, cost of capital is coming down. So just because the markets are 5%, 7% higher than their 10-year average, should we be sellers? I don't think so. So two things can happen. One is earnings might surprise going forward. And second is, because of the lower cost of capital in everyone's calculation, the valuations in the DCF can meaningfully go up significantly. So I think we are not in a euphoric zone. Yes, we are slightly above fair value based on the historic reasons, but we are moving into an era where the country can transform meaningfully from what it has been over the past so many years.
Abhay, so let me just paint the picture for you. GST is symbolic in the short term, but it's an important reform. This will change India's image and positioning from a global standpoint, because this is a mega reform which everybody was anticipating. It's been a tough negotiation for the current administration, but finally looks like they've achieved it. So in this kind of a market, when global liquidity is strong, India positioning is changing, how should one participate? Because those who are planning to participate now, they are not buying stocks exactly cheap.
See, it depends. If you are an investor through the mutual fund route, the headache is someone else's, so you need not worry about it. If you are an individual investor, then, like I said, don't go into stories like, logistics companies are going to get benefited drastically, or consumer durable because of GST. I mean, that should not be your... Yes, if you are going to buy a consumer company based on your analysis, look, the monsoons are very good, look, the second pay commission effect will come, by all means, because those are factual and that will actually have an impact much sooner than GST is going to have. So you have to be careful what is the logic that you are choosing based on. So there is a buying opportunity still, and a 200-point fall or a 400-point fall in the Nifty for an investor should not be deterrent, provided he does his homework and chooses the right stocks, not based on hearsay and not based on illogical things like I heard today some people saying, the profits of so many companies will go up, or the taxation, they're doing basis calculation. It's not going to be, the taxation is not going to change. If the overall taxation comes down to 18%, or some places it goes up, your fiscal deficit the government is going to look at. So effectively they will have to reduce some benefits that are there. Based on taxation, overnight windfall is not going to be there, or neither is going to be an overnight loss for the company that we are talking of. So investment decisions should not be made based on this kind of a logic.
Abhay, so what is the best way to participate then in this market?
So our top-down full year FY17 earnings estimates for Nifty is 10%, and that remains so. And therefore we are expecting earnings cuts to happen through this year, because estimates are still over optimistic. And 1Q results, while in line with market expectations, kind of confirms that, because the 1Q street estimates are at 3% growth for Nifty versus 17% for the full year FY17, which itself suggests that a lot of hope and hype is around the second half FY17, and we've seen this picture over the last 3 years. Every year at the beginning of the fiscal year, there's a lot of hope on second half, and the second half does not come out in line. So in our view, top down, unless we see a change in policy stance by the government and the RBI, growth in India, growth recovery in India, which is decent as we speak, will not pick up pace in any meaningful way to help deliver 17% earnings growth, which markets are expecting.
Nirmal, earnings growth is on a mend. Do you think we could see a sizable recovery and a huge earnings momentum in next 1 or 2 quarters?
So earnings this season has been a mixed bag, and there's very hesitant recovery. It'll take time because so earnings will depend on one, the demand pull, which will basically drive the top line sales and therefore will reduce the operating cost incidence. Two will be interest cost of fund. Many companies are very greatly impacted by that. I think earnings growth, to my mind, should start picking up from third quarter of this year, which is post monsoon, maybe from Diwali peak season. If the monsoon is good, I think that will help sentiment a lot. And a lot of demand also comes from the sentiment. People are enthusiastic about future, they buy more, they invest more, and the cycle basically becomes a virtuous cycle. And also the cost of funds and many other cost savings, which that companies have been undertaking. So I think you should see a much bigger or a more significant or more broader and wider recovery in earnings from the third quarter of this financial year.
Right. Abhay, GST is, will definitely bring in ease of doing business. The unorganized sector will become organized and they will be fillip to productivity. So, will this boost earnings rather than curtail it then?
Yes, over a period of time, definitely. So that's why it's a very welcome, that's why I say it should happen 10 years back. Not only that, you're forgetting that, with the because these are mostly going to be e-governed and e-complied with, it'll be very difficult. The Bahi Khata will disappear. So everyone knows what one can do in a Bahi Khata. That will be open to scrutiny, to manipulate things. Look at, for example, the stock exchange before the computerization days and when there was the Badla system. Number of things could have been done which are impossible to do now from trying to avoid tax. So tax avoidance will come down, transparency will go up. So yes, to that extent, people who are doing that, it will impact them negatively. But on the plus side, if I was a clean businessman, and that is where it is going to head towards for all businesses, then look at the ease of business. For example, I don't have to make 12 plans for 12 states. I know at one go, this is what it is, this is how it is going to happen. So the babus who would come for inspection cannot do that anywhere. There's a computer, it's e-filed, e-governed. So all that is going to, sometimes the system gets cleaned up by necessity. Typical example being, let's say, the landline and the mobile. As long as the landline was there, everyone knows what kind of system flaws were there, what kind of people had to pay out to get correction done, line done. Since it is the mobile, it may not be a comparable example, but I'm just telling you, when these shifts take place, it's not only the business environment that changes, it is also a lot of other factors that go along with that change.
Then, you come from that school of thought where you like to be a contra investor, which is buy fear, sell greed. Where do you think markets are mispricing? Because suddenly if I look at the entire market action, logistics stocks, NBFC stocks, there are some stocks and some groups and some clans which are trading at P multiples which are unheard of. A Bajaj Finance now is trading at a P multiple which is higher than HDFC Bank. Similarly, in the logistics space, if I look at Container Corporation, it is trading at a P multiple which is actually higher than Gateway Distriparks.
See, I think mispricing is certainly there in sectors like banking. What happens is over the next 2 to 3 years, the problems which have come out in the last 1 year are likely to become not as worrying. So I believe over the course of the next 2 to 3 years, the sectors like banking should pick up. Then if you look at it, the capacity utilization part of it in the economy is improving over the next 2 years. And I think starting 2018, there should be a capex cycle. So I believe that, over the next 2 years, it is the economic cycle which is likely to help the whole earnings environment. You have capacity utilizations which are low, and those capacity utilizations are likely to go up. As I was pointing out to someone, basically if you look at indicators like, even FMCG volumes, they've been very low because of two bad monsoons. Clearly, all these areas are going to see a cyclical revival with the improvement in monsoon this year. So I think in a whole variety of areas, you're going to see capacity utilization go up, and that leads to actually earnings improving. Having said that, because there isn't big fear at this point of time, to expect mega returns in markets are not likely, because for mega returns you have to buy when there is fear on the street, when there is blood on the street, and that is missing now. So that's why you have to prepare yourself for moderate returns based on the economic cycle, and not mega returns which you get by buying when there is blood on the street.
Sunil, but they've been mega returns in pockets like NBFCs. How should one approach them considering they've been in a tizzy of late?
We have shared it earlier also. I think we are definitely very positive on niche financials, and specifically on companies which are catering to the huge shift from physical savings to financial savings. We all know that India is a country of huge savings. However, out of the $500–600 billion annually that we save, a lot of it is going into physical savings, whether it was real estate or gold. I think the lure of both, despite gold having done well over the last 3–4 months, has definitely ebbed meaningfully. And as growth of black money also reduces, a lot of these saving is going to move towards financial savings, and therefore wealth management companies, life insurance companies, asset management companies, they will all be big beneficiaries of this shift in wealth. Again, India is behind the world by 15–20 years, and if you have seen the growth of the mutual fund industry or the life insurance company or the wealth management company in any of the developed or developing countries, I think India is way behind. And at least we believe that these sectors can grow like multifold over the next 15–20 years. So we remain quite optimistic on this part of the NBFCs.
Nirmal, I'll also stay with your big ideas. We've got a sense on GST, but let's talk about consumption. The big booster for FMCG will come as indirect taxes will come down. Auto sector also will benefit because the taxation structure will be very uniform after the GST. So do you think names like Maruti, HUL, some of these stocks will benefit disproportionately?
So Maruti at 20–22 times, if they have say 30% growth or 35% growth for a year more, then with slightly little forward perspective, valuations again become, of course they are not cheap, but they don't become prohibitively expensive. And then you have quite a few other auto companies like Telco, they are quoting at 10 times. So India, if you look at the good companies and growth industries, so 15–20 times or 20–25 times multiple also will be given. People will, so I think people look at PE-G ratio. So what your P multiple say can be in line with growth at least. So from that perspective, I would say that it's a little expensive, but it's not exorbitant. It's not something which is a bubble or very speculative at this stage. It's not like many startup valuations where there are no revenues, but they are valued at some obscene multiples of revenue or long future profit. So I think most of the companies are still in the band which is long-term average kind of thing.
Nirmal, one wonders at what stage of the cyclical recovery are we in? Is the big bull run for India intact if reforms such as GST come into effect?
So I think we are already on the way to recovery. So if you say the stage, then I would say that is the early stage of the upper curve, or so this is what is a very good time. Valuations have run a little bit ahead of very quickly because there are a lot of liquidity all over the world and a lot of other positive factors around. But of course you'll find opportunities, because if it's going to be a good positive economic growth, and if there's acceleration in the GDP growth, then obviously there will be opportunities, and markets will always should have upward bias.
Okay, so Sunil, the same question to you perhaps, but let me phrase it slightly differently. What is your understanding of where are we in terms of this bull market cycle? Are we like are we in 2003, 2004, where where the earnings momentum surprised us and then a mega bull market warned on us, or this is more like 2008 kind of a 2007 kind of a bull market where we were nearing the peak?
So, we are in 2003 as far as the corporate profitability is concerned, though we are not as cheap. 2003 was a great time when economy was, very bad, as well as the valuations were even worse. This time the economy is obviously, you can compare it to 2003, and from here on it can only grow faster, but valuations are obviously not that cheap. Having said that, what can happen is, which I mentioned earlier also, is that companies have capacities, and if the demand comes in, you'll have this huge operating leverage, where for the same balance sheet your sales and profit will increase. And on top of it, you have a scenario where interest rates have come off and they can still come off further. I think one thing which is different from 2003 is the fact that global liquidity is available in plenty. So if $15 trillion is invested in negative interest rates globally, I think the move towards some of the larger economies which have great macros and good political stability like India, you might have liquidity which can come in, and which not only impacts the markets technically in terms of high flows, but also enables the companies to reduce their cost of finance quite significantly, and also aids in capital building, which is the need of the hour as far as the country is concerned. So just to sum it up, we are in 2003 as far as the economy is concerned, and revival can be very swift. But in terms of valuations, we are definitely not at 2003. So from 2003 to 2008, the market went up 6 times. Maybe in the next 5 years, it might not go up 6 times, but it definitely looks like going up.
Right. Gautam, let's chat about then sector calls. Would like to know about your biggest overweights and underweights right now.
So overweights, the biggest overweight for us is pharmaceuticals here, given the current valuations, and in our view, a lot of the FDA related concerns being more backward looking. We also like retail private banks, non-pack financials, oil and gas, media, auto parts. Underweight, the big underweight calls for us remains infra cap goods, and also auto two-wheelers and corporate lenders, because we still haven't seen enough acknowledgement by the private sector corporate lenders yet.
Okay, let me also get some closing comments from Abhay Hama. And Abhay, I go back to my very basic question. Ultimately, it's all about GST, and that is what we are discussing. Something I should have asked you earlier, but let me ask you as the final question. What is your understanding of the GST implementation process? Do you think the actual implementation will take more than 2 years? We may talk a lot about GST and the grandeur and the fact that this is the ultimate tax reform which this country has seen. But when it comes to the absolute economic reality, do you think the real life change is 2 years away?
See, there's no denying the fact that it's a reform which should have happened, if not earlier, at least 10 years back. So to that extent, it is a major step forward and since it is a constitutional amendment bill, what is happening today, what one sees is it will get passed, and that will be a major step. So there's no sentiment wise, there's no denying the fact. But let's look at how it is going to be. See, there are 2 more bills after this that need to be passed. Now, both those bills is being insisted upon should not be finance bills. So firstly, GST will go back to Lok Sabha, which is easy. But the 2 more bills have to be passed related to the state, which if they are not finance bill, they have to come back to Rajya Sabha, not for 2/3 majority, of course. Just simple passing. So which is also, but it's a process. But the bigger thing is that all the states have to accept it. So that is on that side of it. Then comes the question of implementation. It is not an easy task, although from what I know, I think it's going to be highly technology driven, but the adaptation of small traders and everyone accepting that technology is not going to happen overnight. So it is a big reform, but it is not something like which is going to show its effects as of today in actual terms. Now, on the positive side, I think what will happen is that there is going to be, firstly, in terms of transparency, that's going to improve. I think tax collections are going to improve. I think as a businessman, for me to plan, if I have to do an all India business, I have to have 7 different or 10 different plans from 10 different states. That will get eliminated. So it's going to ease the business. So if people are thinking that as of tomorrow GST is passed and day after the profits of companies are going to go up, or some companies are going to go up, we have to understand that the taxes is going to be revenue neutral. It's not going to compromise on the fiscal deficit. So for that to happen, the ease of business and that it related in doing better business, that is a slightly long drawn out process. So while it is good, I would not say that as of tomorrow or even in 6 months or even in 8 months that you're going to see an impact on the bottom line of companies just because of GST.
Well, gentlemen, it's been fantastic to have all of you on the show today, and thank you for breaking it up for us, what GST means for the market, how much of the good news or perceived good news is in the price, and how should one approach stock markets when they will open tomorrow morning.
But suffice to say, there's not going to be a huge pop when we open for trade tomorrow.
A lot of good news is in the price, and let's be real. I mean, what is the common consensus? That GST is grand, it's big, it's mega, but the real life change is 2 years away. And 2 years in market is a long, long time. The world could change a 360-degree turn in 2 years.
Okay, we will see you then with all the market action tomorrow morning at 7:30 a.m.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.